So here with Craig Stent, Research Analyst at Harbour Asset Management. We've just had the capital markets session at the Downstream conference. Interesting session, wide range of views and issues sort of explained up there. Wonder if you might be able to just go through from your view what you think some of the key international drivers are on the cost of capital for the main generators in New Zealand at present?
Sure. I think obviously the generators need to access the debt market, or in the impending mixed ownership model, then we're going to have potential equity ownership from offshore. So I mean the key issues for those guys globally looking in is the things like regulation in the New Zealand market, how certain that is, the risk profile of some of these assets, how stable the earnings profile of these companies are, and also things like what's the management like and the governance of the companies generally. I mean, in terms of the cost of capital, I mean, obviously there's the underlying debt cost, which can be a function of market volatility and risk premiums for equities or risk premium for country risk debt profile. And New Zealand's probably in a better shape than most countries globally in terms of debt profile. I mean, the trade balance is okay, and the government debt profile is probably okay relative to other people. And you see it trading at the moment in the debt market, spread to LIBOR for New Zealand government debt, and Australian government debt is actually trading a negative spread relative to, say, something like France or Germany, which is actually positive spread to LIBOR. So it's a cost of raising debt globally. New Zealand's perceived to be a safe place at the moment relative to those other countries, which is quite interesting in itself. Okay,
so quite positive in that respect. But I guess, I mean, from the company's perspective, we had representatives of PowerCo and Meridian on the panel this morning, and I mean, what do you think are the main challenges that they're facing when they go to those markets offshore seeking capital or debt?
Yeah, I guess Dennis mentioned that it's about engaging with the investors over there and getting them comfortable with the story and certainty of, like I said before, of earnings and the business case. So that are some of the key elements, and obviously they need to go over there regularly and explain the story and for those people to understand it. And there's obviously idiosyncratic issues with the New Zealand market, as you're aware of, hydrology risk, not for PowerCo, but for the other gentailers, hydrology risk, and there's gas and outages of transmission and all sorts of stuff like that. So I think there's some of the key features which global investors don't quite understand. They expect just to have stable earnings like they do perhaps in the global market.
Sure.